Hey guys, Dan Fitzpatrick here, stockmarketmentor.com. And a few days ago, I featured Upstart actually in Twitter. Turned out to make a lot of people happy when the stock was breaking out above this level, above this last little high. What day was that? On the 18th, so a week ago, Tuesday. Anyway, the idea was that if the stock broke out here the way I saw it, you look at the volume and it was just starting to pick up. And if it broke through this resistance, boom, it just looked like it would move really well. And the volume was pretty good. And so I had said, hey, it might not be that big a gain here, but I really thought that the stock could go to 160. So about 20% above the close, quite a bit more from where we entered, but still, we'll just look at the close. So like 3 days later, the stock actually hit it here on this last Monday, a few days ago. It hit it real briefly and then fell lower. And so I'm looking at this saying, okay, is the trade over? And I'll say, well, actually, no, that trade is over. I know a lot of people on Twitter that I got messages from, as well as a lot of members, took profits here on the price target. Personally, that's great, but just personally, I think it's worked out better for me that if I have a profit target or a price target of 160 in this case, I'm probably selling at 155. I'll leave the scraps for somebody else. I just want the meat and potatoes, because if you're trying to top ticket with the sale, most of the time you're going to wind up selling late and you're going to be chasing the stock on the way down. Whereas if you sell it early, and early depends on every chart, but if you're thinking, well, I want to get out a little early, I want to sell into strength, the idea there is that you're able to get a fill because there's still people that are buying stock. And one way that I assess, and this is certainly true in pre-market trading, but in all trading, one way that I assess whether the market's strong or not is I'll put a little bit out there at just slightly above where the current offer is. And if it gets snatched up right away, then I know there's still demand for it. If it doesn't, then I'll adjust that offer down to the current market offer, and maybe even just a little bit below that, and then see how that works. And you could say, well, if you looked at a tick chart or this or that, you'd be able to see the same thing. Hey, I'm just working in generalities here. I'm not doing neurosurgery. I'm just trying to get what I'm looking for and move on. And so this method is what works for me. But also just in general, you got to look at where the closing location value is, the CLV, relative to where the stock is traded for that day. And this was one of the reasons why I really liked the way this stock was trading. Okay, it had pulled back here, but then on this day, you had decent volume, not anything like it was the day before, on this gap and crap here. But I liked the fact that the stock closed very high in its daily range, like almost, within 60 cents of the all-time high. So that was a good positive close. It meant that there were buyers all the way through the day. And so the next day, it's actually here. The next day, gapped down a bit, but the buyers were still there. And so here, the market opened essentially right at the low. It went down a little bit, 4%, and then rocketed higher again. Very, very high close in that day. The following day, we got the same thing, profit taking first thing in the morning, but this time the stock rallied up, but then closed maybe I'd say about halfway in the trading range, and that's different here. That's really different. So at this point, you just want to be looking at it. You don't want to say, oh, this is it. This is the top. No. You just need to notice this kind of thing. I'll let you have whatever takeaway you want, but you just need to notice that, okay, something's changing. So the next day is just a little bit more critical. Boom. And so the next day you see what happened. Again, a gap down. Third day in a row, the stock gapped down. It gapped down here, here, and now here, below the entire prior day's range. And that was a big deal. And that's when you would look at this and say, okay, well, it looks like this might be failing. Looks like that might be it, because you're getting, you're getting this. Let me show you. Okay, stock closed there. It opened up here, which is below this low. Get it? And so when it does that, you have to look at it and say, okay, well, maybe the blooms come off the rose here. This thing isn't moving like I thought it would. But here's what you do. You don't predict this stuff because it's still in a strong uptrend. You just watch it. And that is when, and this was the genesis of my trade, that was the time when I would look at it and say, okay, I see this weakness, but it's starting to move up. And so if it does keep running, say above 120, if it kind of holds that level or even up here, that means that there are still real buyers in here. There's sellers too. There always are. But the volume characteristics, the price characteristics tell you that there's still buyers there. And so the stock finally hits, even if it just closed here at 154, that's enough. You got to look at this prior resistance and say, all right, I'm done. But certainly if it hits 160, that's an obvious selling point. And so we get the stock that's sold. However, now it's formed this little base here. It's a little flag pattern. And so this is what I do. If you're still in the stock, then hang on to it. There's no reason to sell it. And then what you'll do is you keep a stop right under yesterday's intraday low. Now, if you want to take a position, go ahead and take one too. There's just not that much of a pullback here. So go ahead and take one, but this is a new trade. Stop at the same place. And your idea is after this kind of pullback, you get a zig here, little tiny zag here, you're looking for this kind of move. So we've really got two trades, one that just kind of ended and the other that just may be starting, and it all is just a function of what your risk is. So anyway, that's all I got for you, and I will talk to you next time.